My name is Joshua Stanton. I'm the mortgage dude, and I'm a senior loan officer with CMG Financial. And today, my guest and I are going to be talking about the all-in-one loan, proprietary product, and the only one of its kind in America today. So I'm lucky to be joined by the VP of All-in-One Finance, Mr. Dave Herbst. How are you, sir?
Yeah. I'm good, Josh. It's super exciting to be with you, and I'm glad to participate with all the education series that you're doing and putting forward, especially on this loan program. So glad to be here. Good to see you.
Thank you, sir. So I want to get right down to it. Dave's been gracious enough to give us some time to talk about the best mortgage in America, and it's the all-in-one loan. And I just want to get right to it. I'm excited about this loan. So Dave, let's break it down. What is the all-in-one loan?
Well, the all-in-one loan is, as you indicated, it's a proprietary loan product that we pioneered about 16 years ago, back in 2005. And it's engineered to help people reduce the size of their mortgage faster than a traditional loan. And it does that by helping people avoid much of the interest cost that comes with borrowing money for a house. As you know, when you borrow, we typically use traditional loans that are forward amortized and closed-ended. We make payments on these each month. Typically, about 9 out of 10 customers use a 30-year loan or a 30-year fixed mortgage. About 4% use a 15-year mortgage. Bottom line is people are in debt for a fairly long time throughout their lives, right? Much of their adult life, they're in debt with a mortgage. And we as a company believe that should be sped up. It doesn't need to take that long. So we pioneered the all-in-one loan to help people reduce the amount of interest they have to pay over the life of their loan, get out of that debt faster, decades sooner, but do it in a manner in which really helps stay liquid, keep their money that they're using to pay down faster with, to keep that money securely available for them if they ever need to use those funds. All of this is achieved by a unique structure. The all-in-one loan is part 30-year draw HELOC and part checking account. So it's a mortgage product that actually combines your personal banking with the mortgage financing all into one fluid instrument to help people achieve, interest savings and accelerated payoff. It's an extraordinary tool.
Absolutely. I love that you just called it a tool, because I call it a tool all the time. It is a financial tool. It's not just a mortgage. This is a financial tool for people to really better their financial lifestyle. So, can you tell me, where does this type of finance come from? Because I know it's not new, and I talk to people all the time about it, and they say, well, how come I've never heard of this before?
Yeah, and of course we haven't heard about it before, right? I mean, it's not necessarily new for us. It's not new in the United States. Again, 16 years old this coming June. It's somewhat newer to the American mainstream housing market, because what this does is it allows your income dollars, your cash flow, to go further for you, to work harder for you. And we get into the details of exactly how that occurs. But it essentially uses your income to benefit you, the homeowner, the borrower, more so than your cash is going to benefit any bank. That's why it's not a mainstream product. In other words, this isn't necessarily a loan program where the traditional deposit banks are going to benefit the way that they do today. That's why they certainly haven't really gotten behind it. This is really kind of an anti-mortgage mortgage. In a way, it's also kind of an anti-bank mortgage product, which is why, again, it's not mainstream here in the United States, but it is mainstream in other countries. To your point, this is not a new idea. This comes from other places. The concept really began in Western Europe, where these are widely known as offset loans or offset mortgages. They've expanded into Canada, New Zealand, Australia, India, a variety of different places. The real reason why these types of loan products have innovated in those parts of the world is because many of these countries have eliminated tax deductibility benefits when you pay mortgage interest. So they no longer have that tax benefit like we still do here in the United States. What happened was the industries began to innovate. They essentially, were worried that home ownership and borrowing for mortgage or for a home to buy a home would be less marketable, less a benefit. So they started to innovate the way that lending was offered. And out of that came loans that helped homeowners reduce their mortgage faster, keep the cash that they're using to do that with liquid so they can live freer and more securely and simply get out of debt faster. It's just a better product for people that want to be a homeowner or are homeowners. But it's not a new idea. It's not. It comes from other places for very good reasons.
you hit on a bunch of things that I just want to get into right now, but I'm going to take one little snippet of that. So you talked about the ability to obviously pay things down faster. It's a smarter way to borrow. So talk to me just a little bit about paying principal first and how you can pay this loan down, and just kind of explain that part for me a little bit.
Yeah. Yeah. So if you think about a traditional mortgage, let's start there real quick. Traditional loans have this sort of built-in disincentive, if you think about it, to put any extra money towards your loan principal, even though we know that financially it'll help you save money and it'll also help you save time, right? If you put an extra few $100s towards your traditional loan, it's going to speed up the process a little bit and you'll pay a little bit less interest. The disincentive is that you don't really want to do that with a whole lot of your funds because they're closed-ended, meaning that those funds are locked away in the mortgage and you can't get them back. They're one-way tools, right? Money only flows one way. And that's part of the problem. That's a big barrier. Part of the reason why 58 million households today owe collectively more than $11 trillion in mortgage principal on their homes today. And that's getting worse, right? Despite low interest rates, people still pay high amounts of interest and are in debt for much of their adult life. And this has an adverse effect on a variety of different things for them, their own retirement savings, as an example. So what's so beneficial about the all-in-one is that it's an open-end mortgage. It allows you to put money in and take money back out freely, 24/7 over 30 years. When you do apply money towards your all-in-one loan, 100% of your money goes towards principal first, not interest first, like with a traditional loan. So, and all of your engagement with your mortgage with the all-in-one loan is through the built-in checking account that comes with it. So in other words, Josh, when you make a deposit into the all-in-one loan checking account, your mortgage principal drops that day by the exact same amount, but yet your money is still free to use. It's available 24/7 for you to use to pay bills or whatever else you have to spend money on. But while your money is in the mortgage, it's kept your principal balance down, which serves to help reduce your monthly interest payments.
Yeah, absolutely. I mean, disincentive, huge word right there.
Yeah.
Also, I would piggyback on that by saying that there is a lost opportunity cost by overpaying a 30-year mortgage. If you do not have access to that money anymore, there's a lost opportunity cost. So, so Dave, let's talk about who this is right for, because I talk to, again, clients all the time. And they're like, well, how do I know if this is right for me? And I'm extremely bullish on this product. So I'm like, it's right for everybody. But let's break that down just a little bit more. Who's this type of loan right for?
I agree with you. I think it, and you keep saying it. I do truly believe this is the best mortgage product available in the United States by far. I do believe if you can qualify for this loan, it's a better mortgage. Not that the qualifying aspects are any more challenging than any other mortgage. I'm just saying that if you're qualified, this is a better way to do it. How do we know that it's suitable though, and actually going to financially benefit somebody? It really all comes down to their cash flow, right? So think about your banking behavior, because it's your banking behavior that impacts your mortgage debt and serves to reduce your exposure to mortgage interest. Josh, you tell me, do you meet anybody? Is there any one of your clients or partners that wouldn't want to save money and time? I mean, I'm guessing it's sort of rhetorical, of course, right? So that's what this does. I think we can all agree that that's a good thing. The way that we test suitability and financial benefit is by using our interactive simulator. It's a calculator that incorporates not only just the mortgage debt that you may owe or that you're thinking about owing, and also incorporates your banking behavior. For those homeowners or those borrowers out there, potential borrowers that live a lot closer to paycheck, that's exactly who the regular traditional mortgage is for. A traditional mortgage is nothing more than a payment plan or a repayment plan, if you think about it. It's spread over many, many years, decades of your life. It's a comfortable way to pay down the debt, but it adds up with a lot of costs. The all-in-one loan is really engineered for people that are cash flow positive, live well within their means, have good savings habits, and are goal-oriented, so that they can strive towards, meeting some financial goals of theirs. It uses their flow of income dollars and idle savings, money that would normally be sitting in a savings account or money market account, earning very little interest at all. And by the way, probably losing a lot of value, because we know the US dollar is constantly losing value as it sits there in idle cash. So it puts those dollars to work, pays down principal sooner. If you overspend, you're going to go the wrong direction, right? If you spend more than you make, and I think such is true with any other mortgage, you're going to go the wrong direction. There's risk involved in that, and you'll add cost to your life unnecessarily. So this is really engineered for those people that are cash flow positive, good with their money, good cash flow habits, pretty well established and disciplined with their finances. But using the interactive simulator is key because it's a comparison tool that helps everybody understand whether or not this is going to benefit them or not.
Yeah, I agree with you 100%. It doesn't have to be, this is not a rich person loan.
No.
This can be for anybody. And I've got multiple success stories from even my dear mother, who is a single mother and retired, and she just wanted to pay off her mortgage faster, right? We were looking at different things. So I said, Mom, you got to do the all-in-one. You know, she doesn't make a lot of money in retirement, but she's excellent with her financing. And I would like to think that I got a little bit of that from her. But, her, and then I work with people that make $1 million a year, and that to me, no brainer. And I want to say, I am biased about this loan. I'm very bullish on the idea. I personally have the all-in-one loan on my primary residence with my wife. And there are multiple ways to use it. You can get out of debt fast with this type of thing and save a ton of money. We're using it to multiply real estate. So there's a lot of different ways that you can use this thing. It's not one dimensional. Really, you become the bank. Here are the keys to the car. You drive it. You do what you want with it. And I love that about this product.
Yeah, I do too. I think you exposed something that's worth, really kind of homing in on. One of the biggest differences is a regular mortgage is a payment plan. It's this repayment plan. You're on schedule. Somebody, the bank defines or the lender defines, what that payment plan looks like. That may feel comfortable and certainly affordable. But at the same time, it's also an obstruction. It slows your progress, right? Imagine just, walking around with a literal and figurative ball and chain, right? It would slow your pace. You lack opportunity, you miss opportunity, and you actually pay extra or in excess of what's really necessary. When you get this loan, I tell people it's more like guardrails. You can't borrow more than you qualify for, but you have the ability to pay down as aggressively as you want, as fast as you want, but also borrow back up using your home equity dollars whenever you want freely up to that limit that we qualified you at. So it really gives you the freedom and flexibility over an extended period of time in your life that also gives this enhanced level of financial security I think people are really looking for today, right? To your point and what you're doing, building real estate, right? A portfolio of real estate. So you're using this, it sounds like you're using this, Josh, as a way to gain wealth, right? In real estate and other areas, not just to pay down your primary residence, but you're using those savings to then go reinvest. Is that the case?
100%.
Yeah, that's extraordinary. I mean, it's more like a flexible credit facility, right? And it's always there for you, more so than just this ball and chain mortgage.
Absolutely. And just kind of furthering that idea, because people are always asking me, can I do this on my primary residence? Can I do it on my secondary property, investment properties? Can you talk about, the all-in-one product, what they can be used for?
Yeah, available for purchase transactions and, of course, refinancing out of a current mortgage. And this can be applied to a primary residence, a secondary vacation home, as well as an investment property. It's a phenomenal program for investments. Generally speaking, those of us that invest in real estate would like to accomplish a couple things, right? We would like to have the real estate in the portfolio grow in value. A greater goal in the near term is to create more positive cash flow, greater positive cash flow on a monthly basis, right? That is the difference between your mortgage expense and of course, what you're collecting in rents. How do you do that? Traditionally, there's really only two ways we can do that. We can refinance into a lower payment, but we have to rely on interest rates to go down in order for that opportunity to exist. And then you incur cost, may not be worth it. The only other way to actually create positive cash flow in a rental property is to increase rents. Now, that's not always possible either, right? You don't want to price yourself out. You want to remain competitive. And you also don't want to scare away a very loyal tenant that is paying on time. I think one of the hidden secrets to large benefit with the all-in-one for real estate investors as they use this for those investment properties is that just by using this loan, your monthly payment reduces. Your monthly payment is just the interest only that accumulates on a daily basis and then totals once the month is ended. That payment is going to reduce ongoingly month over month until it drives down to zero sooner. So you're in effect creating greater positive cash flow each month. The difference between what you're collecting in rents and your mortgage expense is growing. And that's, of course, because you're saving money, you're saving an interest expense. And I think that's just one of the kind of the underlying, benefits of the loan for real estate investors that we should probably talk about more.
Absolutely. I mean, I talk to realtors as much as humanly possible, as much as they will listen to me about the all-in-one. And right now, especially in our markets, as an alternative to jumbo financing for clients, it's really a no-brainer for most of these clients, in my very humble opinion. And
good point.
Can you talk about that a little bit?
Yeah. The luxury market is it's COVID, of course, hit and kind of began to shrink our, the industry's ability to serve the customer in the jumbo environment or jumbo markets. That's, of course, returning, slowly but surely. But the all-in-one loan has never wavered. We've been able to finance up to $2 million as a guideline limit. We routinely make exceptions beyond that, upwards of $2.5 million, $2.7 million. You're not limited geographically by loan size or what you can get on this. And it doesn't make the loan more expensive. There's no loan level price adjustments that make it more expensive to close or anything like that. It's structured very simply, no limitations or restrictions that are built in geographically speaking on loan size, unlike a traditional loan. So it's phenomenal for those luxury environments, people that are savvy and also people that are not that savvy. I got to be honest with you. If you know how to use a checking account and you're working and you have income, right? You have an income source and you're not routinely spending more than you make, guess what? You possess all the skill set you need to save probably tens of thousands of dollars in mortgage and potentially even have your home paid off in 9 to 11 years on average. I mean, those are the average numbers. And all it takes is somebody that already possesses those skill sets to benefit.
And this is another big, so I just used this recently. I'm going to use this example. So this client told me, we're looking at jumbo products. I don't want to put 20% down really. I said, okay, why don't we do the all-in-one loan? Let's do 10% down.
Sure.
And
not
right
great.
There, instant sell right there. Okay, cool. Tell me about this a little bit more. No brainer for this person.
Yeah. Or think about this. Yeah. Think about this. Think about that homeowner that has maybe 15% or 20% down, right? And you could say, hold on a minute. Why don't we just qualify you at a 90%, right? So as if you're just putting 10% down, but you come in with 20%, come in with all the money that you want to, but we'll qualify you at a higher credit limit. Right. But you can go ahead and put that money down or into the loan initially at closing to drop your balance initially. Therefore, you begin saving right away, but you still have access to a portion of your down payment. A lot of people structure things that way. So in other words, if they've got 20% to put down, they come in with that, but we can qualify them all the way up to a 90%, right? Given their credit score and loan size that qualifies in our grid. That way they can retain access to 10% of the 20% they were prepared to put down initially. And it's a phenomenal. We also have delayed financing, Josh. And I know that you've used that before. Delayed financing allows a cash buyer to retain a large portion of their cash right back out after they've closed their purchase transaction. The day after, they can take an application with you and your team and retain generally up to 80% of their cash investment into that property. So they can go put those dollars back where they were, hopefully earning more interest than they're paying, right? And that's the whole idea. But delayed financing is a great option for those cash buyer situations too.
We were talking a little bit about this before, and I want to revisit this because I thought this was really, really strong. So, obviously talking to realtors about how they can use this product to multiply their business as well and to help more people and to talk to real estate investors. Can you touch a little bit on why real estate agents should really get into, or at least understand enough to be dangerous, and then get me involved with these real estate investors to just really catapult their business to the stratosphere?
We keep talking about this loan product as a tool because it is. It's a conversation starter. It is a marketing engine, a marketing tool, a conversation starter, a business gatherer, a relationship starter. I like to remind people at the beginning of every closed transaction, there had to have been a new conversation. There had to have been a period of time in which you're cultivating and generating that new relationship and the trust between customer and real estate professional. It's hard to do that these days because there's really nothing new to talk about outside of housing prices increasing dramatically, right? Which just creates anxiety, I think, in most buyers. Well, one of the ways that anxiety can be tempered And one of the ways you can generate new conversations is by talking about something that's new and refreshing and puts the consumer first before the banking industry. And that's what this loan does. Secondarily, most of those people that are buying real estate or own real estate today needed to rely on a mortgage, right? If we didn't have access to credit the way we do, thankfully here in the United States, I think that our home ownership rate wouldn't be upwards of 2/3 of the nation's, right? 2/3 of the nation. I think that we have a lot lower home ownership percentages if we didn't have access to credit like we do. And we know that most people need to rely on that financing in order to make home ownership possible. So we in the industry, in the mortgage side of the business, we play a very important role. But that's not far enough, right? Just providing somebody the financing they need isn't far enough. I think what goes further and what people really want is a way to not only just obtain a house that they want to buy, but also get rid of that debt as quickly as possible and save a ton of money. Well, the real estate professional is the beginning of that conversation. If they're not advocating a better way to finance and pay for real estate, then they essentially could be setting their customer up for a tremendous amount of unnecessary interest expense that comes with a traditional loan. So in other words, what does that do? It obstructs their client's progress, financially speaking. It also, in the end, obstructs their progress as a real estate professional, because we know about 20% of our market buys again in about 5 years. Well, what if we could speed that up? What if it could only be 2 years? And that's because the mortgage that their buyers get initially was a more efficient tool to use and got them ahead sooner so they could buy across town in the neighborhood they really want to live, or in the school district they want to send their kids to. You know, those are things that are on the minds of home buyers today, and the mortgage is an impediment to those goals. But the all-in-one loan is a solution to that problem. So the real estate professional should participate in that conversation, in my view.
Yeah, absolutely. It's powerful. Think about it. If you could sell a house from the same client every 2 years, maybe this person is young and motivated and they want to buy 20 properties. So every 2 years, or maybe even every year, you can get a deal from that client. That's big.
Yeah. And how is that possible? It's possible because in that 24-month period, imagine the principal balance of the person that you put into a home 2 years ago. Imagine that principal balance of their mortgage has reduced by 180 grand because of the all-in-one loan, right?
Yeah.
Without any change to their budget, without any change, without them having to make more money or cut back on their expenses. While in a traditional loan, they may have only paid down their balance by, call it, 30 grand, right?
Yeah.
So big difference in the type of equity position they now have as a seller as they begin to think about or consider moving again and buying up or whatever their housing goal is. This loan accelerates that, period. So why wouldn't you want to get involved?
Yeah. I mean, it's exciting. It's super powerful. And, Dave, I'm going to stop us there. We're going to do a lot more videos, but, I just want to thank you for taking the time to do this call for me. And if listeners have any questions on the all-in-one loan, or if you want to get a personalized simulation showing how this loan could change your personal life, you can get in touch with me directly at jstanton@cmgfi.com. Again, that's jstanton@cmgfi.com. I'd be happy to talk to you. Thanks again, Dave. It's been a pleasure, and I can't wait for the next one.
Yeah, likewise. Thank you again, Josh. Appreciate it. Bye-bye now.
Thanks a lot.